Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, the focus is on the July 2021 inflation numbers and implications. The National Bureau of Statistics (NBS) published Nigeria's inflation numbers for June 2021 last Friday. The inflation rate fell for the third consecutive month to 17.8% year-on-year from 17.9% year-on-year in May 2021. We have continued to emphasize on inflation because it can reduce the purchasing power of your savings and investments. Inflation tracks the rate of increase in the prices of the goods and services that households buy. This is captured mostly annually, current year price versus last year price, or monthly, current month price versus last month price. The NBS collects prices for about 740 regular priced items across different sectors, rural and urban, for each state, which subsequently is classified into 12 broad divisions to derive the indices. The moderation in the headline inflation can be linked to high base effect, which is the sharp increase in prices in June 2020 due to the COVID-19 lockdown, despite a faster increase in prices between May and June 2021. Some of the factors that drove the increase in prices between May and June can be seen below. A. Higher energy prices. Average diesel price per litre rose by 1.5% month-on-month to 242 naira 40 kobo per litre in June 2021 from 238 naira 80 kobo per litre in May 2021. B. Sustained bottleneck in the supply chain due to poor infrastructure and high insecurity. C. Naira devaluation 1.4% month-on-month at the parallel market from 495 naira to $1 at the end of May 2021 to 502 naira to $1 at the end of June 2021. Further review of the headline inflation shows that the food sub-index, which accounts for approximately 50.7% of the inflation basket, declined by 0.45 percentage points to 21.8% year-on-year in June 2021 from 22.3% year-on-year in May 2021. The decline also could largely be attributed to the high base effect, as the month-on-month change printed at 1.1% in June 2021 relative to 1.05% in May 2021. Major food items that recorded the most price increases include bread and cereals, potatoes, tubers, and milk. Imported food inflation rose 16.9% year-on-year and 1.3% month-on-month in June 2021 due to the persistent FX illiquidity and currency depreciation. On the other hand, the core inflation sub-index, which measures changes in the prices of goods and services, excluding food items, which are usually volatile, moderated to 13.1% year-on-year in June 2021. Items with the most increase include medical services, footwears, passengers travel by air and road, and pharmaceutical products. By states, Kogi, Bauchi, and Jigawa recorded the highest inflation rates at 23.8%, 20.7%, and 19.8% year-on-year respectively, while Cross River, Delta, and Abuja recorded the lowest with 15.5%, 15.2%, and 15.1% respectively. What are the implications? 1. Reduces purchasing power. Reduce the quantities of goods and services one can buy with their income. 2. Reduces the real value of your savings and investment when interest earned is significantly lower than the inflation rate. C. The CBN Monetary Policy Committee may retain the monetary policy rate at 11.5% at its next meeting this month. This may lead to further drop in fixed income rates. 4. Lower interest rates could be positive for the equities market. 5. Elevated cost of living, which reduces the standard of living. 6. Discourages savings and investments. This means more spending. To lower the impact of inflation on your savings, do not keep too much idle funds in your savings and current accounts because they earn near zero interest rates. Instead, you can invest in money market mutual funds, or directly in fixed income instruments like treasury bills and commercial paper. Kindly listen to our episode on understanding fixed income investments on the YouTube channel for more details. We expect inflation to remain below 18% in the coming months as we approach the harvest season, and barring any major shocks like the removal of fuel subsidies and an increase in electricity tariffs. Thank you for listening. Please join us same time next week for another exciting and interesting session. For comments and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 070-8246-3747. Stay blessed.